Good morning. Happy Friday, everybody. Welcome into another long-form episode here on Mining Stock Daily. My name is Trevor Hall, your host once again. This week, we got yourself a twofer. Yeah, Tommy Thornton's back from Hedge Fund Telemetry, talking all things, what was this market? Are we starting to see more cracks in the AI, the hyperscalers, the build-out? And what does this mean for volatility on the back of continued warnings about oil squeezes and prices potentially moving higher? We're hearing some news from the big oil producers and the like on what is really turning into crunch time for oil supplies. And then we turn around and welcome back CEO technician Rob Sinn, once again, really focusing more on the junior mining aspects as we get into a huge exploration season for a lot of companies who went out and raised capital back in 2025, early 2026, putting that capital to work. So he talks a number of stories he's really eager in watching here throughout the summer. And then we close with Bitcoin. Yeah, doesn't look good. Charts looks like it's broken. So we finish with that. All right. Special thank you to Revival Gold, Integra Resources, Equinox Gold, and Visa Silver for their continued support of this podcast and everything we do week in, week out. Let's jump into my first conversation with Tommy Thornton and then Rob Sinn. Have yourself a wonderful weekend, everybody. Thanks for joining us. Be well. All right, we are going to kick off this week's long-form episode with a little bit of a big picture market analysis with our good friend from Hedge Fund Telemetry, Mr. Thomas Thornton, who's coming off a big macro conference here later this week, and also comes to find out he's a renewed gold bug once again. So, Tommy, good to see you, man. How you been?
How about that? Yeah, it's great to see you. I always like chatting with you because we always delve into a lot of different things and of what's been, popular in the market at a particular time. And there's a bunch of things that are not very popular in the market right now. And I would say gold is not one of those.
Yeah.
Silver, I'll stay with, I'll focus on gold right now. I just recently launched a new research note. It's a monthly note. It's called The Big Picture. It's a longer term thesis. I underpriced it because a lot of people, I have only offered it to current subscribers, but a lot of people added it. It's, it's good. But I said I would start buying gold here. And some of the reasoning is gold was sold off because basically liquidity. Gold is not that great hedge against wars and things like that. As Rick Rule, I think, and Stanley Druckenmiller said, gold is really good at times when the leadership of a country or the Fed or the Treasury have no idea what the F they're doing. So let's just think about that. And, I've been a long-term seller of the U.S., parties, the political parties, both sides equal. But I think that these are shaping up. And I'm just looking at my scale here because I put basically gold. I said buy it. It's, around 4,500. I said my maximum conviction where I will buy more. And that's, probably 5-ish%. For me, that's the max position size will be around 4,000. And I can make a case for it to go a little lower. But the other one is GDX. And that does not, gold futures, GLD, those have DeMark buy countdown signals. Market sentiment has not gotten fully overdone. That's okay. That's kind of the way it's been for the last couple of years. GDX does not have a buy signal yet, a DeMark buy signal. So I think we need a little bit more time. I like buying GDX, a little bit more bang for your buck than just buying gold. But I'm looking at this more in the intermediate term.
So you are
'Cause I think
not necessarily
yeah.
you're not calling a bottom here into the
No,
general
no, not at all.
indices.
I mean, if it
You're thinking long term here.
well, more intermediate term. So, like, that's
Okay.
3 to 6 months. I it's not, never sell it. I don't have any of those. But the bottom line is, I think it's pulled back enough off the highs. It's fallen off the zeitgeist of what people are talking about, and nobody really wants to think about it. I mean, Bitcoin has fallen off. I think I was one of the few people that at the highs on crypto week, uh, that I was highlighting, I think that was a top. And Mark, from a sentiment point of view, we got the crypto president, he's all in, meme coins, blah, blah, blah. That marked a top. So that has come down. I told a very well-known, prominent, and a real investor that, when Bitcoin was around 100,000, when it was off the highs, and in Greenwich, he worked for several large hedge funds. Stan Druckenmiller is one of them. Steve Cohen is another. Anyway, he loves Bitcoin, and I said, "Well, he goes, "What do you think?" And I said, "I think it's around Christmas time or so. I think it's gonna go to 66,000." He goes, "Oh, I hope not." And I'm like, I'm not I just look at some of the measures that I use, and it worked. The other thing is right now, I think that crypto or Bitcoin could, it's made another lower high bounce, and on a weekly chart, I think it could get to in the 47,000 level, which
Wow.
it trades like garbage right now. But I'm not like a bull or bear on it. I just kind of giving you the analysis of how I see things.
Yeah,
Uh,
yeah.
no
Let me
bias
ask you
on
this. I
that.
mean, from what you're seeing here, I mean, obviously, I don't want to go too far into Bitcoin, but it is an interesting tell in the big sentiment of things because we have, earlier today, like an hour or two after as we talked Thursday morning's market open, and what was interesting is that the Nasdaq was down over 1%. The S&P was flat, but the Dow Jones was up over 1%. Now, if you needed any sort of just indicator that there might be some sort of movement happening within those big indices, I mean, that was certainly telling. Now, things are
Well,
definitely changes
that
later in
I'll
the
tell you
day.
right there. I'm looking at my screen right now, and I can tell you the largest weight in the Dow Jones, is Goldman Sachs, and it's up 5%. So
Mm.
that it's a price weighted index, so that's why it's up, and I would just basically point to that. I think you have NVIDIA up as well. Uh, so that's probably why the Dow Jones, I don't really, it's kind of a dumb index. The Nasdaq, everything is all about AI, semiconductors, memory chips. I I I think that, like, I talked to a bunch of different technicians, like Jonathan Krinsky from BTIG, and we chat, like, all the time, and it's freakish how if we look at the S&P hits a new high, the Nasdaq 100 hits a new high, but if you run it against those, there's no other run it, like, as a relative chart, there's no other index hitting a new high other than tech. And then if you run like tech versus the semiconductors, you can see that semiconductors have notably outperformed the basic tech index, and everything is getting very crowded right now. And one of the things that this one, if you're listening in your car, you might want to pull over, especially if you're Korean. Um, Koreans, the age of 50 to 60 plus, are cashing in their life insurance policies, taking the money and buying SK Hynix and Samsung in Korea, and they're also buying it in the US. And so those two stocks are DRAM memory companies. They represent 55% of the total index. So there's Um, I mean, it's just freakishly weird. So they're
Mm,
buying this and using leverage. Like, I'm buddies with a person who runs ETFs, levered ETFs, okay? That's his business. He's a great guy. We're very good friends, and he told me that, and he's based in East Coast here in US. He said that 30% of his assets are Korean. So the Koreans right now are going bonkers buying their market with leverage. And let's think about this. And I'll just go here because I think this is a real risk. The Korean Kospi performance was up 28.5% in May. The
wow.
average Kospi stock in May was down 10.5%. Okay. The percentage of Kospi stocks, there's about, I think there's like 850 in there, in the index. The percentage of Kospi stocks down 20% or more in May was 27.5%. Okay.
Hmm,
And the percentage of Kospi stocks up 20% or more was 4.8%. The index was up 28.5%. People are the risk here in the US market and global markets is that people are using leverage. They're crowded into the same names. I could go down the street, 2 houses down. My neighbor works for Goldman Sachs Prime Brokerage. He was telling me his clients are killing it. I said, "They must be long, maxed out semis." He said, "Yep, that's what they are." The Goldman data shows 20% of their entire asset base for hedge funds and institutions are long 20% of semis. It's so crowded and so there's nobody short as well. People are, I mean,
mm,
there are some people short, but the bottom line is it's not going up because of a short squeeze. It's going up because people are chasing this. And if the fundamentals are so good, the positioning is more dangerous for a drawdown. And that I think is going to be very important down the road here for the US equity markets. And as my old friend Paul Tudor Jones said, the US equity market has never been more, or sorry, the US economy has never been more reliant on the US stock market in history. And I
okay.
think that's really telling the truth there. And I think maybe the global markets have never been more reliant on that. And if we're relying on just a subsector of stocks to take the market higher and everybody's jammed into them, long, levered, complacent, things could get ugly quick.
All right. It's funny you mentioned Goldman Sachs a couple of times here, and they actually have made some news here. It's things that I've really noticed in the last day or two here, Tommy. But they're taking the lead underwriting for SpaceX's IPO. It's supposed to be the largest
Yeah.
in history. We can go into the incredible amount of red flags that are in
Yeah.
that SpaceX
I
IPO. But
I
it's
think
it's
the best
funny.
thing to do,
Oh,
my
go ahead.
advice is don't get involved, long or
Well,
short.
Goldman's involved. In fact, I did not find it coincidence whatsoever that after taking this underwriting position, they came out today and said they expect SpaceX's AI revenue to be tenfold, which
Yeah.
is maybe why that Dow Jones was up so big today.
How much is their AI revenue?
I don't know for sure.
Yeah,
I'm just
nobody
seeing the
knows.
headlines
They
here.
actually
Yeah, yeah.
lose money, Trevor, okay? They eh, listen, I'll say this, every single Wall Street bank except Jefferies, for whatever reason, is on the deal sheet, and they're all, you know, they need the business, and this is the biggest IPO, and, Morgan Stanley and Goldman are fighting over the top, spots. Um, I think it's really important to think about the SpaceX in context. Uh, First of all, they don't make money. They're a money-losing company. They need probably $200 billion if they're gonna build out all the stuff they wanna do. They mentioned a TAM, you know, tangible addressable market, right, of
Mhm.
$28.5 trillion. So that's kind of like me saying I have a newsletter subscription, and if everybody in the world subscribed, that's my TAM. But the problem is the rockets, which is what everybody thinks it's about, really is only like a TAM of like 400 billion, right? Out of that 28 trillion. And then the rest is Starlink. And, that's the only profitable place in the business. And I see no justification for or reality with data centers in space. Uh, Semiconductors don't work well in space. It's radiation for that. It's not necessarily cooler. And, a lot of people don't talk about this, but oh, well, we'll use solar panels and we'll save all this money on on energy costs. Well, energy costs for data centers is about 5 to, let's say, 8% of their operating expense. So it's not like they're saving this much, but they've got to launch rockets, and the big rocket that's never had a completely successful mission, or it hasn't gone up around the moon, or, it hasn't gone up that much. And I think Starlink satellites are up 300 miles. I think this big Starship has gone up 150 miles. I mean, it's still impressive, but the bottom line is,
Mhm.
I think this thing with a low float of 5% of the float being offered, it'll probably go up. Everybody will talk about Elon Musk as the genius. He's the richest man in the world. They're gonna buy Tesla, which I think the reason they're gonna buy Tesla is because Tesla is about to go into the red with earnings. They don't have their full self-driving yet. I mean, we've discussed this 100 times. The robo
Uh,
taxis it's not even, they have 20, like, Uber-like cars. I mean, it's just a joke. Waymo is doing 2,000,000 rides, paid rides a month, and Tesla is at 20 in Texas. I mean, it's getting to a point where where's the robots? Where's the AI? Where's the, self-driving? Why isn't it working? Oh, but let's merge it with, SpaceX. At With Elon Musk having 83% of the voting shares, I think this is just ridiculous. Oh god, the indexes are gonna add the stock to the mix as well. With
yeah.
5% of the float only offered, I mean, it's just gonna be a total mess, and they lose money. I mean, it's the dumbest thing I've ever seen in my life, and again, I just think people should, you know, stay away from it. Don't try and short it. Don't try I mean, you can trade it on the long side probably better than the short side. But again, they don't make money. It's a mess. It's gonna take a lot of capital. Uh,
Tommy, there's that old saying that, markets are efficient and are supposed to be efficient. But I think for the number of years that you and I have chatted here, I think the more and more we talk more and more about the deficiency of markets, and
yeah.
that is just because we've become so hyper financialized that the people in charge of the markets have been able to drop their guardrails, and the SpaceX during the IPO into the S&P is just a wonderful example. And I'm just kind of curious if this is just going to be one more, like another sentiment type top where we will look back this time. It's like, well, we knew this was happening. Why didn't we do anything about it? And maybe
Well,
something on the back end of this does happen to make that
I mean,
realization happen.
why did the market participants, the regulators allow, all this little leverage used in the system? What, they're gonna look back and we can put a list together of stuff that we knew was dangerous, whether it's 2 times or 3 times levered single name ETFs or index ETFs, the short-term options, the 0-day to expiration options, uh, the leverage levels that a lot of the retail firms have allowed. I just think that it's getting to a point where, yeah, one of these things, it's gonna blow up, and I really do think that the positioning risk in the market right now with semiconductors is the biggest risk, and it supersedes the fundamentals. That to me is a big worry. And okay, here's one that's going to be fun. So EWY is the Korean ETF, and that
Mhm.
covers SK Hynix and Samsung. And I am short this one. But there is a levered SK Hynix 2X levered, and it's traded in Hong Kong. And the ETF cannot get more stock to buy. So it can't do it on swap. It's sort of a technical thing. So what they're doing is they're having to go out into the options market and buy calls, out of the money calls in SK Hynix in Korea, and then it's traded in Hong Kong. Again, all these people are buying, the levered ETF like crazy, but MicroStrategy had one of their levered ones had to do the same thing because they couldn't
Mm.
get more shares, so they bought calls, and if you have calls that are out of the money, it doesn't work the same way as, one for one or, leverage. It if let's just say that SK Hynix goes down 25% in a day, and it certainly can, it's gone up like, bonkers. That's 50% down on the 2 times levered ETF. But if it's with calls, this thing could go down a whole lot more. Again, the leverage in Korea, it's never been higher. It's just everybody is just in a FOMO, YOLO mode right now. It's so
Mhm.
dangerous. And again, maybe I'm just older and don't want to take a lot of risk, but this is like the dumbest thing I've ever seen in my life. I think I've said that twice, which, probably 2 things but it's
Well,
just crazy out there.
on that same line, Tommy, one of the most shocking things I've read all week actually was just this morning, and I was following up. There's a gentleman that was on Bloomberg. It might have been yesterday or earlier this week. You may have seen this, but Ed Zitron, who writes a newsletter called "Where's Your Ed At?" and it's all about artificial intelligence, tech stocks, and he really goes in depth on a lot of these things. And I started reading, word for word, one of his latest pieces that was published in the mid-May called "Where Are All the Data Centers?" And he really challenges this theme of the AI data center build out, and if it's really happening, what is actually being used as compared to what is been said to be built out, and there's a lot of misinformation coming from these companies. And so I just wanted to pull this quote and actually read it. He said, "Those that actually, quote, come online, end quote, aren't actually fully constructed, but have brought on a single phase. Something I wouldn't begrudge them if they were anything close to honest about it. In reality, data center companies actively deceive the media and customers about the actual status of projects, most likely because it's really, really difficult to build a data center." So I'm reading this thing, and it just makes me realize, like, we talk about the build out of data centers all the time. I actually don't know what's actually being built, what's being used, what's still a slab of concrete. I have no idea, but it's part of the narrative coming out of the tech companies right now, and therefore part of the hyper financialization of our
Well,
economy right now. And we are
you're right.
holding on to this by a string.
You're absolutely right. So one of my clients, runs a value hedge fund. He's an old friend. We were talking about this. I was on the train coming home today, and he said something about, when some of these data centers are gonna come on board, and he has clients in his fund that operate data centers, and he was telling me, it's real. It's a great business. It's sort of I mean, I don't know if it's the greatest business, but it's like sort of like public storage in many respects.
Right.
But he said to me, guys don't really understand how few data centers are actually under construction and what the timeline limitations of regulation and physics portend. And no one can convince me that investors are now so patient that they are willing to look enough out into the future that their allocations to these securities make sense. No effing way. Uh, I mean, that, we were talking about private credit and stuff like that. And, that's, I think, part of the whole thing. If things start to get nasty in the markets, it's going to be with one of these big mega AI companies or a hyperscaler that starts to pull back on their plans. And I think it's going to be OpenAI, possibly, um, SpaceX. I mean, they're already leasing out and making a pretty good amount. Their Grok or AI uh, data centers to Anthropic. I mean, they're
Right.
making like a lot of money by just leasing them out. Probably more money leasing them out than if they were doing their own AI. But that to me, I think is going to be when things start to break, when the memory chip stocks start to break, when Nvidia breaks, when it all just sort of falls apart. Because back in 2000, it was when CapEx started to get cut by the telecom companies, and at that point, it got to all the guidance was so good, and the future valuation levels were, they were still high, but we were going to grow into this. I think that that's going to happen again, and I believe that when it does, it's going to be absolutely carnage, and it was
Yeah.
carnage back in the third quarter of 2000. I mean, stocks went down like 50% on guidance cuts. Apple, Dell, Microsoft, Nortel Networks, the largest company in Canada, like a Cisco or, AT&T type of thing. They were the largest company in Canada. They went bankrupt a year later.
Yeah.
Okay. It just, things could shut down pretty quick. So until then, I don't know. I
Well,
don't know exactly.
until then, Tommy, let's finish up here. But one last question here. What's the most important charts you're watching right now?
Oh,
What could definitely be the tell?
okay. And I could give people 100 guesses and they wouldn't get it. But I think the most important thing I'm watching right now are the CDX credit spreads for high yield and investment grade debt. And one of the big things that bulls have been highlighting and holding their head high, saying everything's fine in credit, is that the spreads are very narrow, and that's the spread between high yield and treasuries, the same time frame. But I use DeMark indicators, and when I run DeMark indicators on just about anything, and sometimes on economic data, it works pretty well. Sometimes on credit spreads, it works really well. And we just had signals that reflect that it could start to widen out. And that, I mean, basically the chart goes up, and that's widening of the spread. When that happens, equity markets are under pressure. I think it works better than the VIX, in my opinion. It works very similar, but I get more signals from credit spreads that are more successful. And I posted that on my big picture note, and I really didn't have a lot of people that were like, "You're right, this is gonna be it." But they will the next month probably. They're gonna
All
say,
right.
"Wow, that's interesting." But credit spreads are really, really important to watch. And that to me is like the early warning.
All right. All right, Tommy, thanks so much for your time. It's good to see you and have a longer conversation about all these things. I don't know if we're in summer doldrums or if we're just kind of opening the door for more volatility this summer, but I think we were going to find out here pretty dang quickly. Maybe it comes from the credit spreads. Maybe an oil energy shock hits us in the face here in the coming weeks.
That's
Or
another one.
maybe,
Yep, you're right.
yeah, well, we could go so many different directions.
We have a
Hedge
lot
fund
of catalysts
telemetry.
that if one breaks, look out.
That's right. Hedge fund telemetry, wonderful note. I read it every day. I'm a happy subscriber. I recommend it to anybody listening. Really opens up some technical analysis on the charts and the way Tommy approaches markets. Good to see you, my friend. Until next
All
time.
right, nice to see you too. Thank you.
Hey, stay right there. We'll be right back after a very short break.
In mining, the difference between a good project and a great investment often comes down to one thing: visibility. Terra Hutton is a Sweden-based mining investor platform built to make the invisible investable. Even the strongest project can be overlooked. Geology is inherently complex and data-heavy, and when it's reduced to raw numbers like drill results and technical reports, investors can miss the story, and companies can miss out on investments. Terra Hutton brings mining projects into the digital spotlight, combining data, narrative, and context in one place, so investors can see not just what a project is, but why it matters. Whether you're evaluating early-stage exploration or more advanced development assets, Terra Hutton helps turn complexity into clarity and information into insight. The kind of transparency that builds loyalty over time. Visit terrahutton.io to learn more.
Hi, I'm Rory Johnston, host of the Oil Groundup podcast. I'm also the founder of Commodity Context and have been an oil market analyst for more than a decade. What I love about the oil industry is that it is both unquestionably essential to our modern life, and the supply, demand, and pricing of this indispensable product is driven by an ever-changing cornucopia of geological, geopolitical, and technological developments. Listen as I speak with experts across the industry to explore everything you've always wanted to know about what's moving the market for black gold. Find the Oil Groundup podcast on Apple Podcasts, Spotify, and at clearcommodity.net. Brought to you by the Clear Commodity Network, digital news on the physical markets.
My old friend, Rob Sinn. It's been way too long, man. Welcome back to Mining Stock Daily. How you been?
It's great to be back, Trevor. I'm a little nervous. It's been so long. I feel like it's the first time.
So, where are you? Obviously, I keep pretty good tabs on you with the stuff you publish online, your Substack, your X feed. But it seems like you're always somewhere else. Like, have you full time relocated to Idaho? Because you're there a lot.
It's been a contemplation, actually. I haven't pulled the trigger yet, but it is something I actually am really considering doing. But no, yeah. I'm still in Florida. But yeah, I was in Idaho just recently, about 5 weeks ago. But then I was also in Europe. I've been a few places here in 2026. So yeah, I am racking up the frequent flyer points, but I like Idaho a lot. I really like the Boise area. There's a lot of attractive aspects to it that are unlike South Florida. Like, obviously they don't have beaches in Idaho, but they also don't have the massive traffic and high prices that we do in the Miami, Fort Lauderdale area. And it's a little slower. People are a little nicer, a little more of that small town country vibe. And I kind of dig it,
Yeah, no, absolutely. Boise is a great place. I mean, the whole state's, very cool. I've always enjoyed my time when I go up there. And, you spend too much time up there, Rob. They're probably thinking you play for the Boise Broncos or something like that. A man of your stature. They got a pretty good football team usually every year.
That's true. Boise State. Yeah, that's a big team, and they've got a cool field.
They do have the blue turf. Yeah. All right. Enough of that. Let's get down to business here. We are I guess in my calendar, my kids are already out of school here, Rob. We started our first full week of summer, so I'm anticipating a little bit of summer doldrums. But however, the macro headlines, the geopolitical headlines, are nothing of the sort. Can you believe this? Listen to this. This just in. We're recording Thursday morning, my time, Colorado time. The U.S. is in the middle of final negotiations to end the Iran war once again. Are you buying any of these headlines? How do we? It's literally Groundhog's Day every day.
I am so sick of this topic. It's been 3 months. It's funny. There's certain moments where we recall where we were when something happened, and I recall hours prior to bombs being dropped on Iran on the evening of February 28th. I was speaking in the PDAC conference, the MIF.
Yeah.
And I remember saying, who knows what's going to happen this weekend? And literally hours later, right, it was a foreboding comment. And so for the last 3 months, I feel like we've been in this bad movie script. And it's surreal. I mean, I don't want to talk politics. I don't want to anger any of your viewers, but it's surreal. It's a surreal time. And in many ways, I'm sort of down and a little pessimistic on some things that are happening in the world, including in the US. But then on the other, on the other side of the coin, I think, well, the World Cup's around the corner and it's the 250th anniversary. So let's celebrate and have some fun.
Yeah. Did you get tickets to the World Cup?
I have not yet, but it's going to be here in Miami. There's like 6 or 7 games planned. So maybe I'll sneak into one.
Yeah. I saw some ticket prices were finally starting to come down some other locations. So I'm kind of watching here closely. But let's talk about this macro madness here. I'm watching the oil market very closely, Rob. Obviously have been doing that for 3 months. To think that we're 3 months into this, there's been no oil tankers of magnitude leaving Hormuz to really put things back into equilibrium whatsoever. So every day Hormuz stays closed is another week of just supply shock we have to deal with in our future here. I don't know if the market is yet to kind of price in a supply crunch on the energy side of things and what that means, a trickle-down effect for everything else with the market, specifically with our resource stocks that we like to work in and invest in ourselves, Rob. So you and I haven't chatted since this thing started. So what are the implications of a prolonged Middle Eastern conflict that has on our portfolio of junior miners?
I feel like the high oil prices and the squeeze that we're getting in a lot of areas of the economy, including like fertilizer, potash, sulfuric acid is a major squeeze right now. Tungsten prices breaking out to new highs, right? So all these input costs are squeezing higher. I feel like it's sucking money out of places like the junior mining sector, right? Just people have a little less money to spend. And, the simplest example of that is just gasoline prices, right? So it's just a little more money is getting sucked out of all of our pockets on a daily, weekly basis. And so there's just a little bit less to play around with, right? And eventually after 3 months of that, it does add up, right? It does have an effect, right? And so I think that's kind of part of maybe what we're seeing in the venture and the junior mining sector. But also, on the flip side, I'll say, look, the headlines aren't great at all. And I feel like both sides are lying on a daily basis about what the actual truth is. And you're right. The big 2 million barrel tankers are not moving through the Strait, certainly not anywhere near where they were in February. But the oil chart is making lower highs, right? And I go on my X feed and there's a bunch of alarmists who have been banging the table on this thing for months. And frankly, from a market standpoint, they've been wrong, right? Like they were shorting S&Ps in March. They were shorting S&Ps in April. They were buying call options on crude oil futures. And I mean, I don't see their P&Ls, but based upon their tweets, these guys got to be just absolutely murdered the last couple of months, right? So the stuff that gets the clicks and the views on social media is actually not what makes you money in financial markets. And I think that's really, really evidenced by what we're seeing in the stock market and in crude oil. Now, that being said, like $95 a barrel on WTI is not a low price by any means. But if you were to tell me like all the things that are happening today, which I'm not going to even go through the list because that would be another 5 minutes, and we'd just be at $95 on crude oil, I would say you're crazy. There's no way. It's just going to be 150, 175. Yet here we are. So who am I to say I'm smarter than the market, right? And sort of that's what I go back to is the market feels like this is figured out. Even though it hasn't been figured out yet, the market feels like it is figured out.
Right. We work in some of the riskiest corners of any equity market here with the, Canadian venture exchange listings, explorers, and the like. Mostly, we can call it illiquid mining stocks for the most part here, Rob. And we know that when there's any sort of volatility, people will sell positions that, that they don't care about. And that usually those venture exchange stocks go first. So if we're talking about ongoing volatility, we don't know what's around the corner, anything could happen the next week. How are you kind of protecting your portfolio right now of junior miners, or are you allowing and welcoming maybe a washout or a sell-off event to allow you to accumulate more?
It's interesting because I raised cash back in March and April, and I got up about 35%, I think maybe 40% cash at the peak. I dabbled in some puts, and I was like, this is not working, and this is not even an effective hedge for a junior mining portfolio, especially the kind of stuff that I play around in, the sub 100 million, market cap stuff, right? Very, very speculative. So I just decided, I'm going to keep some cash and I'm just going to ride this thing out.
Have you started redeploying some of that cash, or are you still waiting for a better entry point?
I haven't made any huge acquisitions, but I'm always buying and selling stuff, at least on a small basis. Like, Northern Lights is a new name in my portfolio, very tiny speculative junior in the Yukon and BC. And, adjusting things a little bit, but honestly, probably since March, there's been more selling on net than buying, and just a consistent keeping cash around 30%, right? Like not feeling like I'm ready to go all in, by any stretch, and also just trying to lower the portfolio volatility. And frankly, like the day-to-day moves in this market, I don't understand. Like I wake up one day, gold's down $100 an ounce. I wake up the next day, it's up $75 an ounce. Like, and I know we can come up with a soundbite, yields a dollar, Iran risk, blah, blah, blah. We can come up with a rationalization for it. But to me, it just seems like it's stupid day-to-day volatility. But that's not to say you can't take advantage of it if you are trading those futures and you can handle that kind of volatility.
Yeah. I mean, it's a trader's delight right now, right? I mean, up and down days throughout the board. I mean, no real solid direction either way. I mean, we could have chop for the next 3 months. I mean, President Trump even mentioned not having something until September. So
I feel like he enjoys it.
You'll be happy.
Yeah, I feel like he enjoys the being the center of attention and making these headlines, on a daily basis. I feel like he relishes this role of driving markets.
Yeah. Hey, let's focus on the explorers right now. Obviously, we're going into exploration seasons for specifically for those companies that operate, pretty far north, and we're seeing updates. Drilling has commenced, or mobilizing exploration crews to those sites. And so it's going to be an active summer. We had such a good late 2025. Obviously, there was capital flowing off the shelf into this sector, financing upon financing. That's being put to work. So that's a great sign. Companies, despite what the market does, are going to be able to put that capital work and hopefully pull something, do some really good stuff. And we'll have a lot of news here later this summer into the fall. Talk about this like exciting time of the year for junior mining. There's a lot of anticipation right now. What stories or what are you trying to, what's kind of in the forefront of your mind of things that you are really anticipating yourself for your portfolio here in the next couple months?
The drill program at Highway 37 getting started in 10 days. Obviously, that one is highly anticipated. We talked about Idaho with Hercules and some of the other companies in that belt, including Rio Tinto actually is going to be drilling at the Pole Creek project that they have that is right across the highway from Hercules. I think that's super exciting, and a discovery could happen there absolutely in 2026. Another one is Endurance Gold. This is kind of under the radar. They don't get a whole bunch of headlines, but they're in BC. Really impressive gold explorer that has had great results the last few years. They put out a resource for the first time in January above 2 grams per ton gold average grade, in a near surface environment that could be an open pit. And they're drilling and testing new targets, including a huge soil anomaly to the south of their main focus there, at the Reliance project there near Goldbridge, BC. And there's a bunch of them, these, Yukon plays like White Gold, or, Yukon Metals is a copper gold porphyry explorer there in the Yukon that's getting underway, at the AZ project. And I could go down the list. I mean, there's so many drill programs, like you said. And in fact, I think the challenge for investors is digesting all the news that's hitting on a daily basis, and that will be coming for the rest of 2026, and, interpreting it effectively. And sometimes, like, there's a news release. There are a couple examples in the last couple of weeks where news release hits, and you have an opportunity to read that news release for a couple hours in the morning and potentially to buy the stock. And we've had some examples of some runners like San Lorenzo Gold put out results back in May, and the stock ripped higher. You could have bought that on the open and made money. And there's a few other examples, like that. So I think it's a really exciting time to be a junior mining investor. I'm cherishing it and just hoping that it continues.
Yeah. What about, anticipated technical reports? I keep on thinking we've had ongoing discussions with Nucor. They have a PFS should be coming out here in the next few weeks, but there's a few companies like technical reports that will be published. I'm really kind of ecstatic, even with this pullback in gold to $4,500, give or take here, what the inputs are going to look like with some of those reports and where those economics said. Do you think, are people maybe less interested now in those economics of projects, potential economics now than they were maybe a year ago?
Yeah, I think that's right. Because I think we're already factoring in the $4,000 gold price, and some companies might even be already starting to get comfortable putting like 4,400 or 4,500 in some of their sensitivity studies. I mean, obviously, like, that's not a base case. I'm most interested in the copper side of things, right? Because we had some PEAs come out the last few months, and they were still using sub $5 copper price as the base case, right? So, I mean, realistically, I'm sorry, I don't think a sub $5 copper price is the base case at this point. And I think probably, we should be using $5 and maybe even $5.50 or $5.75, quite frankly, because, and maybe that's a sentiment tell, but I feel like we're going above $7, $7.50 here this year. We got Goldman Sachs sort of sounding the alarm a couple of days ago with a really good report that continued to demonstrate the global, supply shortfalls. Like the market always thinks the supply is going to be there, and they take the miners at their word in terms of their guidance, and then the miners always disappoint, or usually disappoint, right? And so the copper market is tight, man. It's tight.
Yeah, no, it absolutely is. And even challenging those recently made all-time highs in copper here this week before kind of seeing this pullback. It really, I think, has been more of the speculative cash flowing into those copper explorers, like in anticipation as well. But, if I think you could probably go count on more, if you had more fingers than you were allowed to on each hand, you could count on how many people are drilling or discovering a porphyry each day, right? So this mineralization is incredibly important for the market, but that doesn't mean all porphyries are not the same. So jurisdiction actually really matters. DPM Metals just this week hit a screamer in Bulgaria, porphyry mineralization. I actually, if it wasn't already producing company, I think it probably would have made a huge run up. Like if it was $100 million market cap company,
for sure.
I mean, the thing would have been way up. So talk about like jurisdictional risk when it comes to porphyry and copper exploration. What are those check boxes that you need to have for you to allocate capital?
Well, I think the big thing with porphyries is CapEx, right? And so a lot of the discoveries that we're seeing being made out there, I mean, number one, they're deeper, right? They're like undercover. They're being made because nobody found them previously because they weren't outcropping. You couldn't see them at surface, right? So we have better technology and tools now that can see deeper in the earth, and some companies have drilled some deep holes and made new discoveries, including the one that you just cited there in Bulgaria. That's a deep discovery, but it's also adjacent to a mine, right? So they basically put together a new model and understood that, hey, there's this anomaly lurking down here at depth, and they drilled it and they hit, right? But that's also that's 1,000 meters deep, right? So think about that. Yeah, there's a lot of discoveries being made. But if the ore body is 1,000 meters deep, I can tell you that mine is not going to be built and in operation in the next 10 years, right? It's going to take at least 10 years to get that thing up and running. So even though there's these ore bodies out there and some companies are having good results, it's not solving the supply problem anytime soon. It's not even solving it by 2030, right? And so I think the big thing with porphyries is just CapEx. I think in a lot of these projects, like Andina, in Argentina, like I'm sure they can get that permitted. That's not the big issue. The big issue is going to be the CapEx bill, and then the build, right? In that location, at that elevation, it's going to be a little more challenging. That's not to say they can't get it done, but it's just a little more challenging.
They've also been hitting some really nice stuff in Colombia. And actually, as far as jurisdiction, there's some favorable movement with geopolitics. The right-wing candidate for president in Colombia forcing a runoff. And actually, Colombia looks pretty juicy once again. Not only, for business development, for mineral exploration. There's some good companies do some very interesting work. Is this something that still maybe is being discounted? Is Colombia still being discounted by the market?
Colombia, I think, is one of the Latin American countries that has a lot of upside from the exploration and mining standpoint here in the next decade. Because I think for a long time it was forgotten because of first it was the narco trafficking in the 80s and 90s, and then it was the rebels, right? The FARC, rebels, and just nobody wanted to go to certain places in that country for fear of the rebels. And not to say it's a perfect situation, from a security standpoint, but it's gotten a lot better. And certainly the tides are moving to the right there, and more pro business and more pro mining, right? And I think people are always gonna want jobs, and they're gonna want higher paying jobs, and the exploration and mining industries do offer that to Latin American, countries. And so, look, as long as companies are being, respectful and wanting to do what's best for the locals and maintain an ongoing dialogue and taking feedback from, the people that live there, I think, mining companies will be welcome.
Yeah. Okay. I do want to pivot here a little bit, because there's a couple of things, back in not too long ago, we were talking about how cryptocurrencies and technology capital was taking away from inflows into resource stocks. But I'm here looking at Bitcoin, $62,000 area here, Rob. Big sell-off. Does not look good. The chart does not look good. In fact, the Michael Saylor even sold some. I thought he was supposed to have diamond hands, Rob. Are we to a point, is this thing over? Hey, is the cryptocurrency market over yet? Yet, I'm rooting it to die, but is it or is it just another symbol of the volatility? People are just really scared.
I think the bloom has come off the rose with the cryptocurrency sector, quite frankly. It's no longer novel, new. It's no longer really cool, right? And so much BS has been exposed in this sector over the last 5 years. Started with Sam Bankman-Fried and that FTX, and then there was just one after the next, quite frankly, frauds, right? And now Bitcoin, it got all, the institutional adoption, it got the green stamp of approval from Wall Street banks. And then we have Saylor, the carnival barker, the consummate salesman. Look, don't get me wrong. He's good at what he does. He's very good at what he does. And in fact, if he could be CEO of a junior mining company, I would probably buy his stock, at least for a trade, quite frankly. But yeah, he's built a financial, engineering house of cards there at Strategy, right? And so he has to make the interest payments on the convertible debt that he's issued, right, to buy Bitcoin. So he had to sell some, and it's not whatever it was, 30 or 35, Bitcoin, that Strategy. So that wasn't the issue. The issue is the message it sends to the market,
right,
and that he's not able to hodl forever, that actually there could be more sales that are forced in the future because of the liabilities that Strategy has to its convertible debt holders. And then Bitcoin, look, I'll say this about Bitcoin. I've been surprised with how weak it's been recently. I actually didn't think it was going to break through 70,000. But it did, and it broke through with force, and it got all the way to 61,000 overnight. I think from a short-term trading standpoint, this is a very short-term statement, like the next week. I think it's got a decent chance of a bounce back, maybe to 66, 67, maybe even to 70,000. Because that is big support on the chart at 60,000 in Bitcoin. And it's a 50% drop from the all-time high. So, assets tend to bounce, when they hit these big levels. But bigger picture, this is a broken trade. This is a broken chart. And sentiment is badly, badly bruised on Bitcoin. When the number one cheerleader, the number one guy, has to sort of go back on his word and all those videos he's made saying diamond hands and never sell. That just goes to show you that everybody's human, and sometimes we all have to sell. We don't even have a choice.
Right. Do you think the broken chart, the momentum with Bitcoin, broken momentum Bitcoin, is it at all supportive of gold, or are we not even close to making any sort of speculation there?
What's weird about Bitcoin and gold recently is they've been trading lower in tandem, right? So it kind of tells me that this stubbornly persistent inflation and stubbornly rising yields are putting pressure on like the alternative trades, essentially like gold, Bitcoin, silver, and higher yields are attracting investors to be more willing to hold currencies, to hold dollars, right? So I it's kind of interesting to me to see these two trade in tandem, because there was a time there where gold was going up and Bitcoin was going down, and it felt like, gold had proven, its metal, like, it won. But that's not as clear to me right now, because gold has been under a lot of pressure in recent weeks.
Yeah. All right, Rob, give me an idea of the next of this summer. Summer doldrums are kicking in. Typically pretty quiet time of year for markets in general, but also for this sector. Although I will say there's been a few years where the summer has been busiest I've ever been usually throughout the year. So there has been its moments where it has been actively busy. But just given where we're at here, what do you expect? More summer doldrums, Chinese water torture? Is people expecting volatility, or do you expect enormous amount of big moves happening in markets throughout the next 3 months?
Well, let's get the Strait of Hormuz back open, and let's focus on the World Cup and some positive things and people, uniting over sports, and maybe we can actually get a better market. But it does feel like Chinese water torture, and with yields stubbornly high and oil prices stubbornly high and people just feeling generally more squeezed, we could have a summer of Chinese water torture. We could have a summer doldrums. But I do feel like, specifically with like gold and the juniors, I feel like sentiment is pretty downbeat. Not a whole lot of speculative enthusiasm in precious metals or miners right here. Levels I'm looking at, look, if we could somehow get a weekly close above $4,600 in gold tomorrow, that would be fantastic. That'd be a very strong sign. That would be bullish. TSX Venture Composite, let's get a weekly close above 1040. That would snap the series of lower highs. I was looking at Kinross Gold this morning, KGC, and it was like a really nice setup, but then the rally just completely fell apart. But I'm still looking at that on a weekly closing basis. So keep KGC on your radar.
Okay. How about World Cup? You got a sleeper team? Who's your favorite? You got a sleeper team for a favorite? Who can go the distance here, Rob? I'm partial to the Belgium Red Devils. Always have been. I love Belgium. Big fan of Belgium, but
I'm going to go with Haiti.
They're only going this far. Whoa! Wow! Did not see that one coming. You didn't even throw out the Lions.
Uruguay and then Haiti.
Okay. And the Knicks taking game one. I mean, you're an old New York guy. Are you excited about that?
I am shocked by that. I actually figured San Antonio was going to run over the Knicks, but hey, we've got a series. That's great. I love the fact that we have a good NBA final series, because the last few haven't been that interesting to me.
Yeah, absolutely. All right, buddy. Rob Sinn, CEO Technician. Thanks so much. Good to see you, buddy.
Thank you, Trevor.
And hopefully we won't make it as long next time you and I connect. Cheers. All right, that's a wrap here this week on Mining Stock Daily. Everybody have yourself a wonderful weekend. We'll talk to you again Monday morning. Be well. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.